We've got a corporate voice that's lined up with us, so let's connect then right to it. We've got the management of Mass Financial here to discuss a little bit more about the company's bonus issue as well as what the outlook is when it comes to the business. Kamlesh Gandhi is joining in. He is the Chairman Managing Director. To begin with, you had early on stated a lot of confidence in surpassing the 10,000 crore AUM milestone by December 23, and that of course did take place. Can you just break up the growth? What led to this in terms of your individual segments?
So thank you and good morning. As you were told, that we reached a very important milestone of 10,000 crores. We are a 28 years old NBFC. And if you say we are predominantly MSME based MSME financer, and around more than 75% of our portfolio comes from MSME. While we also deal in other products like two-wheeler commercial vehicle and to a very small extent on salaried personal loans. So this quarter was also no different. The majority of the growth came from our micro enterprise loans and SME loans, accompanied by commercial vehicle, two-wheeler, and the salaried personal loans.
And what are the expectations then for Q4 with, given that generally it's going to be a strong quarter for lenders, do you think that your growth will sustain or do you believe it can even accelerate further compared to Q3?
So we are a great believer of not just determining the growth, but discovering the growth from time to time. So if you see, we always give a guidance of growth of anywhere between 20 to 25%. But whenever we find opportunities, we do exceed it. So if you say last few quarters, we have been growing at close to 27, 28%. And depending upon the opportunity we get in the market in this quarter, we are confident of anywhere between around 25% plus growth this quarter also.
Okay, fair enough. So you're confident of that growth. You're not revising it any further then?
As I told you that we would like to wait and see the opportunity. We are a company who prioritize asset quality, profitability over just growth. So we'll be more interested to balance these three rather than just concentrating on the growth numbers. So, but having said that, we see a very strong, we have a very strong confidence of growing at 25% plus.
Kamlesh, you've also announced a 700 crore rupee fundraise plan as well, right, via QIP. Tell me, what's the growth runway looking like? What is it that how you're planning to deploy these funds?
I think if I give you the context, I think currently we are well capitalized, but with a view to strengthen the balance sheet and to fuel the future growth, we have taken an enabling resolution, whereas by the 700 can be raised in one or more tranches over a period of time when we get an opportune valuations and good investors to invest in our company. And if we raise this money, I think we should be good for another 3 to 5 years.
Okay. What about your MSME loans? They form a large part of your AUM mix. What's the credit gap that you see here? And what's the kind of headroom for growth that this particular segment offers for you?
So we saw this segment since long. We are one of the oldest financier to this segment right from late 90s. And we work across the revenue class, that is right from a 50,000 rupees loan to a 5 crores rupees loan, which we bifurcate into micro enterprise loans and small and medium enterprise loans. We work with 300 different categories of businesses. And we see a lot of headroom, not only on the credit gap, but also on the incremental demand. With the way this MSME segment is supposed to grow, if we contemplate an Indian growth story of anywhere around 7%, this MSME segment is bound to register a very robust growth. So besides the credit gap that exists currently, I think we see a lot of incremental demand also coming from this segment. And the very important thing here is not the size of the market, but your approach to asset creation and in terms of how you can maintain the asset quality. I don't see any financer that will face any problem as far as the market size is concerned. But how you navigate through cycles serving this class of the economy is very important. And if I tell about our company, we have differentiated ourselves by maintaining a very robust asset quality across cycles, while the demand is huge and there is scope for everybody to grow.
Okay, fair enough. And can you tell us a little bit more about the housing finance subsidiary that was expected to grow at 30 to 35% as per your stated guidance? What does the AUM stand at? Are you able to price your loans better over here?
See, I'm happy to share with you that this quarter, the housing finance company also grew at robust 36%. And we see this continuing in coming quarters also. And we have been in a position to maintain our NIMs as far as the housing finance company is concerned. And going forward on scale, we'll be in a position to make decent ROEs and ROEs on the same.
Okay, fair enough. And over the last couple of quarters as well, your cost of funds, that's come off a bit. The expectation is that banks could ration credit to NBFCs. So what is the trajectory when it comes to your cost of funds going ahead? Would you be looking at diversifying your borrowings?
Sure. So if you see, we have gotten a very strong history of of raising funds over a period of time, over this long period of 28 years, having established ourselves very strongly as far as the banks and other financial institutions are concerned. But having said that, with growth, we will definitely try to diversify our funds and not depend only on the bank borrowings. And we have already started that. Currently, we already started touching the capital markets, and close to 15% of our borrowing is already from the capital markets currently, which will increase over a period of time. So diversification of funds will be one of the key strategies as far as the company is concerned.
Okay, fair enough. And what's the outlook then in terms of your yields with the rate cycle expected to turn on and an improvement is expected in yields? What's the trajectory in turn then for your net interest margins?
I think we are a company who maintained NIMs anywhere between 6.75 to 7% across cycles. And we see no reason why we will not be in a position to sustain that. And we see our NIMs at that level anywhere between 6.75 to 7.25% in coming quarters.
Thank you for giving us all your growth projections and outlook. Good to have you on board. With news that we're currently down 400 points on the Sensex and 21,420 on the Nifty. We'll take a very short break. Don't go anywhere. We'll be right back.